Oracle stock just surprised Wall Street, soaring after a major earnings beat driven by cloud and AI growth. But is this just hype or a real long-term play? Let's break it down. Welcome back to the channel, everybody. We have breaking news. Oracle stock is going parabolic right now, closing at $114.76 after jumping more than 9% today. What happened? Well, Oracle stock is rallying after the company reported better than expected fiscal fourth quarter earnings, which actually blew past Wall Street estimates as the firm benefited from strong cloud and generative AI-related demand. Let's take a look at some of the details. Revenue came in at roughly $13.2 billion, topping the estimates of $13.17 billion. Earnings per share clocked in at $1.32, surpassing the consensus estimate of $1.21. So both revenue and earnings per share beat estimates. If we look at the quarterly breakdown, we see that total revenues grew about 3% year over year, with license revenues increasing 2% and cloud services and support revenues growing 4%. On the expense side, total operating expenses increased 15% year over year due to higher spending on sales and marketing, research and development, and a big increase in stock-based compensation. However, the company's total gross margin still increased to 74.5% compared to 73.1% in the prior year period, thanks to leverage, as subscription revenues typically have higher margins than one-time license sales. As a result, Oracle's total operating income jumped 13% to $3.2 billion, while net income attributable to the company climbed to $3.1 billion compared to $2.8 billion in the prior year period. So what's fueling Oracle's momentum? Three big factors stand out. First, there's cloud growth. Oracle Cloud Infrastructure revenue surged with enterprises increasingly adopting cloud services. Second, AI integration. Oracle's partnerships with AI firms like Meta and its generative AI investments are positioning it as a serious competitor in the AI cloud space. And third, enterprise clients. More and more Fortune 500 companies are choosing Oracle's database and cloud solutions. But it hasn't all been sunshine and roses. Oracle faces stiff competition from other tech giants like Amazon's Oz, Microsoft's Azure, and Google Cloud, all of which offer their own cloud services and AI tools. You've got to remember that these big tech giants have much deeper pockets than Oracle does, making it harder for Oracle to compete on price and scale. Now, another challenge is, can Oracle scale fast enough to meet this exploding demand from AI without taking on too much debt or increasing costs significantly? That's gonna be tough. And finally, you've got to consider that tech stocks are always under pressure from interest rate decisions made by central banks like the Fed, so volatility is something to keep an eye on. So what does this earnings beat and strong performance mean for Oracle's future, and more importantly, how should you invest moving forward? If you're interested in investing in Oracle but are confused about its valuation, don't worry, because alright, let's get back to the show. To start, it's important to recognize that Oracle has evolved into more than just a database company. It's become a significant player in cloud infrastructure and applications, which positions it well to benefit from the shift in enterprise IT spending towards cloud solutions. Oracle's strength in enterprise resource planning, enterprise asset management, and other enterprise applications gives it a competitive edge in the market. And let's not forget about AI. Oracle has integrated AI capabilities across its product portfolio, including its cloud infrastructure, autonomous database, supply chain, and logistics applications, positioning itself as a serious competitor in the AI-powered enterprise market. And it's not just a participant, it's a leader. According to a recent report by research firm G2, Oracle topped the list for the number of AI-related features and functionalities among enterprise software vendors. In fact, Oracle was the only company on the list that received top force in terms of product and market presence, recognition of the company's advances in AI and natural language processing technologies. Despite these advancements, however, Oracle's journey hasn't been without obstacles. One major hurdle is its reputation for complex licensing practices. Its licensing fees can be hard to understand, and its aggressive licensing policies have drawn criticism and legal challenges. There are many lawsuits against Oracle for its Java licensing practices, which makes it harder for the company to attract certain customers who prefer more transparent and flexible licensing models. So what's driving Oracle's strong performance, and why are investors optimistic about its future prospects? One key factor is the company's focus on cloud computing. Oracle has been investing heavily in its Oracle Cloud Infrastructure, offering a range of cloud services such as compute, storage, networking, and database services. These services have been gaining traction with businesses looking to move their operations to the cloud. According to Statista, Oracle holds about 8% of the cloud infrastructure market, trailing behind Oz, Microsoft Azure, and Google Cloud, but that's still a respectable position given Oracle's relatively smaller size. In addition, its autonomous database, which uses machine learning and AI to automate routine tasks and improve performance, has been well received by customers seeking to enhance their database operations. Another reason for optimism is Oracle's strength in enterprise software. The company offers a comprehensive suite of enterprise applications such as enterprise resource planning, supply chain management, and customer relationship management software. These applications are used by businesses to manage their core operations and processes. And as businesses continue to invest in digital transformation and process automation, the demand for these enterprise software solutions remains robust. Now, while Oracle faces stiff competition in the cloud and enterprise software markets, the company's extensive product portfolio, global reach, and strong financial position give it a competitive advantage. That's why investors appear to be optimistic about Oracle's future prospects. Analysts at investment firm KeyBank highlighted in a recent note that Oracle is the best pure-play exposure to AI infrastructure. They point out that the company's cloud infrastructure is well positioned to benefit from the increasing adoption of generative AI applications. Goldman Sachs analysts also raised their price target for Oracle shares last month, citing strong demand for the company's cloud offerings, and noting its progress in areas such as autonomous infrastructure and generative AI. However, as with any investment, it's important to be aware of the risks involved. Oracle's reliance on enterprise customers for a significant portion of its revenue exposes it to risks associated with the health of these businesses. Moreover, as we mentioned earlier, the highly competitive cloud market means that Oracle needs to continue investing heavily in order to keep up with the pace of innovation and maintain its market share. The company's valuation is another consideration, with shares up more than 30% year-to-date. Some investors may find the stock price to be high relative to its future growth prospects. So what does this all mean for investors? Oracle has successfully transformed itself from a traditional enterprise software company into a major player in cloud computing and AI infrastructure. Its strong performance in recent years and forward-looking investments have positioned it well for continued growth. However, as with any investment, it's important to carefully consider the risks and challenges involved and to conduct thorough research before making any investment decisions. While Oracle's future looks bright, it's essential to keep in mind that no company is immune to economic downturns or changes in customer behavior. By staying informed and being prepared for potential challenges, investors can make more informed decisions and navigate the market with greater confidence. That said, if you're interested in investing in Oracle, now might not be the best time given the run-up in the stock price this year. A pullback would present a better buying opportunity. Overall, Oracle is now firmly in the AI conversation, which bodes well for the company's future. So do you think Oracle's strong performance will continue, or are you more cautious about its prospects? Also, let me know in the comments below which stocks you'll be watching in the coming week. As always, stay up to date with our latest content by subscribing. Follow us on social media for daily finance tips. And check out our site for more great content. Thanks for watching. We'll see you back here tomorrow.